Can you all see and hear me?
Yes, we can see. Thank you.
Okay, thank you. Let me just post in the group quickly to say we are starting, so that I don't have to repeat everything in the class. Okay. So I need to apologize for my croaky voice. I have COVID for the 7th time in a year. So I'm still, I've worked from bed the whole time, but I got out, but I do apologize. I can do nothing about my my voice. I hope it doesn't bother you too much, and those who does, just imagine it's a sexy croaky voice. But I am here. Will that be okay? That we do it, even if my voice is a little croaky? Okay, okay, thank you. Okay, so I'm going to share the agenda for today is going to be, I'm going to share just quickly last week, like we've done, the check-ins on the assignments, because let me just get Ahmed in, is that? Let me just get everybody in. There's more. Hello, Ahmed.
Hi.
Okay, so just for those who came late, I do apologize for my croaky voice. I have COVID again, and I can do nothing about my croaky voice, but I am here, and so just apologies for the croaky voice. Is that welcome? I know you're on holiday, and therefore I appreciate it very much that you actually took out the time to attend the class. Ulina, you look beautiful.
Thank you. Hello, Professor.
Thank you.
Hello, everyone.
Thank you.
Hello, everyone. Thank you.
Thank you.
I'm sorry for being late for the assignment or the quiz. I submitted one, but I think it's there is no internet connection, so it's not submitted, and I redo it now. Thank you for reading.
That's fine. I just didn't want to give you that result. That's why I'm sending out reminders. Also, what I've done is last night, I don't know if you had COVID 7 times, but one of the thing is that you get long COVID, and with that you go through periods of where your body goes in quite fatigue, and then you sleep, and then you wake up, and then you work. So your waking hours is maybe strange because I work so let's say through the night, and I just listen to my body. So if I've sent you messages in all hours of the night or day, just know that I'm not stalking you. It's just I know all our time zones are a little different. Okay. What I've also done is I went through each individual assignment. And those of you who have not submitted, I have even extended, but not for the group, individually. So that took some time, but I extended it even to the 6th of August, because I know there's some of you, like Izat is on holiday, and there's some like Wellington, Chan, Matar that need to catch up. And I really, really want, it's better to submit something and get 50 or 60% than to get 0, because although accumulates, even if it's 50 or 60%, just to get it in, is still accumulating to a total, and then we reduce it to what is the total going to be out of a 76, as because there's 100, and then for the exam 100. So it's still better to get it in and get something than to get nothing and then get a 0 for that, because that will just reduce it too much. Somebody in the group has asked me and said, can I excuse them from assignments? And I went and I crushed the numbers, because I cannot excuse from assignments. That's unfortunately the policy of the university. But I wanted to see if this person submit no assignment, but has been in every class and has done every quiz, will he still get a 70? And the answer is no. The numbers just don't work out. So get it in. And if you struggle to submit, then what I've done with a few is I've changed your initial assignment to a resubmit to allow you to submit. Otherwise, I've just taken what you have submitted via email to me and I have graded it on that. So thank you for everybody who is coming to the party. This is your studies, and it's terrible to repeat a subject just because you haven't submitted a few assignments. Okay, then next week is our last content class. So next week we're doing the last two assignments, and then the week thereafter is the last class. So what we're going to do then is I'm going to prep you for the exam. So I will give you by next week, I will give you a summary of, let's say, the quizzes is going to be this amount and the essay is going to be this and the practicals, that's the calculations, is going to be this. Then I'm also going to then go through with you that week to say you're only going to study these for the quizzes. These are the slides that you need to have on hand, okay? Because it's not necessarily to parrot everything out of your head. If you make sure you have those slide packs on hand of the specific slides, then it's a question, and you order it, structure for that exam week per chapter. I will try with Impilo to make the exams as easy as possible, like in chapter 5, so that you know that you need to go to that slide deck. But it's better than to have 500 or 600 pages of slides to isolate the slides that you need to study for the exam in a single exam pack. Then it's easier just to go and find that. Okay. You will have a 2-hour, I'll make it longer. You will have enough time, but Sarah has given us permission to spread it then from the Monday to the Sunday, so that you can fit it in between your in between your timeline. But my experience is that passing an exam, especially like this, which is an open book, the pre-prep that you do is more important than knowing the stuff. Meaning, I'm telling you, I'm going to give you a reference to a chapter. So I'm telling you that I'm going to help you to give, to say chapter, slide, Then what I would have done is I would have gone into the PowerPoints. I would have taken the first slide. So let's say chapter 1. So let's say Krista has said to you, this is chapter 1. These are the slides that you need to do. I would have done copy that slide to mark that as chapter 1. Then I would have gone and copied the individual slides that I will mark for you under that slide, so that at the end you have a exam slide back. Chapter 1, if I have time, I can even do that. But you also need to do something from your side, so that you then have a slide pack for the exam. So if you get a question in the exam, chapter 1, then you know, you go and just go up, find chapter 1, and then you know the few slides under that specific chapter. Instead of going to try to look where stuff is in, let's say, because there's a lot of, even today's slides is over 100 slides. So you can't go and put all the slides together. You need to do that pre-exam prep. If we have time, we will do that. But please, that is an important strategy for the exam writing. Otherwise, you might run out of time. So even if we give you 3 hours, you don't know where's your stuff in the slides, even if you don't know the answers, then if you know where you to find it, then you have a reference check next to you. Said, okay, chapter, then go to slide, these slides so that strategy for that week. I'm not sure how you do it in the other subjects. That's not my baby, but you are my babies too. I want you to pass, if I can put it like that, and therefore this is the recommended strategy I would recommend. Will this help you? Will this help you? Yes?
Yes, Professor. Thank you.
Okay. Okay, thank you. I just need to hear that I can, that you all hear me. Okay, so today we have a lot of slides and we have the pre-representation also. Please, those who have not submitted your assignments, I cannot do it later than the 6th of August because we need to submit numbers also and calculate your numbers. So please, 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 I cannot do more than I'm currently doing for you and following up, giving extensions. So there are few of you. You're in the classes, but you're not submitting. That doesn't help. Okay, please, it's very important. Any questions or comments before we go on? Okay. Wonderful. So just remember, today and next week will be the last classes, and then the third one thereafter will only focus on exam prep. I would suggest that you attend that because I'm going to, the quizzes is easy and it will be said that you must pass 70%. But for let's say the essay and the calculations, so that anyone who has a question there, that you can ask. I'm not going to answer a question if you've never attended a class and if you haven't worked through the stuff. That's purely exam prep. Okay. So let's start with today, and also all the presentations that's being done today and next week will count as a mark for a forum, quite a big mark for a forum discussion. Instead of that, you presenting it in class. So anybody who hasn't presented today will present next week. If you haven't presented, then you will get 0 for that. Okay, so who wants to, how many in the class? We're 18, so we can do 9 people today, and everybody has a maximum of 3 minutes. So Mpilo, you must do a time thing for me. Since the person starts, so that will take 30 minutes. Since the person starts the presentation, so I'm going to do marks as you do, but it's from the others also to learn, so that you can really become good at this pitching. Okay, so we will do half of the class, 3 minutes max. Mpilo, since the do a summary for us, each person as they present, how long they've presented. So just put a timer so that we can, on 3 minutes, you can stop. Can put a hand up for me so that I know I need to stop the person there. You don't have to go for 3 minutes. Okay, so I know Nuran last night was so excited about this. I just want to get a paper quickly, just quickly. So Nuran, you want to go first?
Yes, Professor. Actually, I see the share button is closed, but I can proceed without the presentation. Don't worry.
Let me just see, certain functionalities we don't have on this Teams where, let me just quickly, where it's managed by Windsor. So certain things we can't change. Mpilo, can we change this share button here? Yes or no from our side?
Yes, we can make them presenters, then they'll be able to share the screen.
Okay, so can you make everybody presenters? Starting with Nuran, and while she presents, you can do the others. Or must I do it? Let me just go to Nuran. Pilo doesn't want to come close to me. He doesn't want to get COVID. Okay. Nuran.
Okay.
Nuran, you're presenter?
Yes. Yes.
Okay.
Now
I'm going to put my camera and mic off so that I can make everybody presenters. Just before we start, Nuran, who wants to present today? It's Nuran. Who wants to go after Nuran just for structure and speed? Ulena after Nuran. Okay, who else? We still need to get 7 more. Otherwise, I'm going to nominate, eh? Who wants to go after Ulena? Okay, let me ask, who is prepared? Because those who are prepared, I need to fill 7. Ole? Ole? Okay, so I'm going to nominate then. Are you ready to present today?
No, I didn't. Don't
Okay.
ready.
Okay, Alsvita, Lizette.
No,
Hello, Professor.
Sorry,
Lizette?
Lizette, go ahead.
I've got your comments. I want to make some amendments, and if it's possible, I will do it next week.
I need to have 9 today, eh? So, Alsvita?
I prepare presentation, but I cannot found in my laptop. Maybe I found now. If I not found, if possible, can I will do it next
I only
week?
have 9 spaces next week, so I need to. We need to do 9 today. So we need to do 9 today. Okay. Okay. So the first 3 is it's Nuran, Elena, and then please, if you have not prepared, I need to fill 7. So otherwise there won't be space for the others next week because we said half of the class will do today and half will do it next week. Okay. Okay, Nuran, I'm going to put off my mic. So please, the others, get your things ready because there's seven more that needs to do today. Nuran, the floor is yours.
Okay, I hope you can see my screen, guys. So, can you see it
Beautiful.
clearly?
Yes, we can see.
Okay, great. So first, before presenting the value proposition, I have to introduce you to the business type, scope, and the service provided through this business. The scope of my business is an arts and crafts center, and the service provided is like sessions for adults and kids, and having a big showroom to present all the handmade products made by all people at the center. And there is an available service to sell or buy any handmade crafts. Even trainees can sell their products too. And the center includes lots of activities or crafting activities for sure. Jewelry, painting of all types of arts, handmade gifts to creative items, soup shaping and making. And there is a final service, which is consulting service. If someone is re-innovating their homes, they need a consultation for decorations, colors, and furniture. So the value proposition for my business will be that our arts and crafts center help adults and children in love with arts as a hobby or love buying crafts. who want to learn crafting or buy artifacts by having lessons, or they can buy the artifacts from different categories and select their beloved arts and craft activities from wide range of categories. What is special about this business that it is specialized in different activities. Like, for example, some arts and craft center are only specialized in providing trainings and others for selling. But the center include both activities like trainings and the selling. And sometimes you see some arts and craft centers specialized in certain category like making jewelry and selling it, or just pictures. So it also includes all types of services, jewelry, and rest of types of arts. Thank you. I hope I didn't exceed my 3 minutes interval.
Mpilo, did you time that? You didn't. I just want to, you'll write down the specific one. So to everyone, what we're going to do is for this week as one of the assignments, so there's not going to be other assignments. There's going to be a quiz. Nuran, I'll come back to you. There's going to be a quiz over chapters just to help you over chapters 14, 15, and 16. And then to upload your presentation. So that Naran, so as soon as Mpilo has opened the assignments, then the one you've done now, just upload it, and then I'll put your grading out there. The presentation counts 30 points. And it counts basically as your entire forum point. As part of that. So Nuran, it is beautiful, to the point, and I loved it. Okay, you aced it.
Thank you.
Beautiful. Thank you. You see, it's best to go first. Then the next one is Olena.
Yes, Professor. Now I will share with my presentation. 1 second.
Yes, I've made you a presenter.
Can you see my screen?
Yes.
Okay. So I'm starting. Hello, everyone. My company is called VSales. I will start with a presentation, also the abstract of my company. It's a sales tech company based in Kyiv, Ukraine, with a team of 10 experts, which is specializing in sales management, developing automatizations for sales processes, managing sales teams, and currently we have offices in Ukraine, also in Austin, the USA. So talking about our company's opportunities and our values, VSales is developing digitalized sales business processes to help small businesses and startups streamline operations and enhance conversion with exceptional personal approach and sustainable experience. Currently, I'm going to come back to our also dedicated and developed high-level value proposition, where I will tell more about by what we are developing and helping our customers. So first, we develop the business processes by reducing the human factor, lack of unified standards, and lack of tracking sales results by implementing the complex of model by system, technology, and people. Mostly, from our experience, this complex model will help to optimize all process flows and lead to increased sales conversion, which is the final goal. So, in summarize, I would just want to highlight that our company has our own methodology by which we audit your all processes. We suggest the implementation. We have we are implementing the stack of technology, and also we are mentoring the full process of your business. Thank you very much for your attention. I was rather quick. Thank you.
Beautiful. To the point. And within the 3 minutes, so you also iced it. And as soon as it's open, so Mpilo will work on everything today so that we can submit tomorrow. Okay. Who of you are also ready of the rest of the class to present today? Naran, Olena, thank you so much. I deeply appreciate it for your effort. Who else of you are ready to present today? No one. Okay. So what we need to do is then, what I will do is we will then take in 45 minutes for next week, but we need to secure to see who of you will in which order so that we can secure the order. Elsvita, can we do you next week first?
Yes, Professor. Thank you so much.
Okay, then I just want to go on the, because we must finish, because this counts 30 points for you. And next week is not a hectic, so even if we use 45 minutes, that's still fine. And it can be 2 minutes, like I've seen now, Olena's is less than 2 minutes, and that's perfect. Okay, who wants to go after next week, after Elsvita?
I can.
There's two, Lizette?
Lizette.
So
Yes.
I'm just, as you go, I'm just putting it on my schedule here on the right, so that you can just see, I'm putting it on an Excel spreadsheet there. Who wants to go next week after Lizette?
I can go.
Okay. Who's I? Sorry, I just need to see where the mic opens. Abulela. Ah. Okay, Abulela, let me just go down.
I can go also.
Okay, who's after Abulela?
Muhammad Izzat.
Izzat, okay. Will you be back from holiday then, Izzat?
Professor, next week I would like to.
No, but I could handle, inshallah.
Okay, thank you. John, are you going after Izzat next week?
Yeah, next week is actually.
Okay, so you're going 5th. Let me just go to your name. John, you must get your assignments in, eh?
Yeah, Professor.
Professor?
Yes, Ahmed?
Hello? Yeah, since
Yes,
I'm still at work, I will not be able to present. So please keep my name for coming week.
Okay, just keep it. Let me just hear Ahmed. Okay. Okay, so you will do it next week.
Yes, please. I'm still at work, actually. I didn't go home, so
Okay.
it's really difficult for me.
Okay, so Ahmed, I'm going to put you up number 6. So let me just get to your name quickly. There's 2 Ahmeds. Yeah, Ahmed. So you're going 6 next week. Who's going after Ahmed next week?
Matar.
I'm so glad to hear. Okay, Matar, you're going number 7 next week. Who's going after Matar next week?
Hi, Professor.
Yes, who's speaking now?
Yes, I can go after Matar.
Okay, Ollie. Thank you, Ollie. Ollie, you're number 8 next week. Who's going after Ollie?
Okay, thank you, Professor.
Thank you, Ollie. Who's going after Ollie next week? Winnie, Wellington, Sarah. There's 2 Sarahs. Rhodas. I need to put you in, otherwise you're not going to get marks. So you must please pick up Ashraf.
Okay, I'll be
Yes,
next
Professor.
week.
Yeah.
Who said, okay, Rhodas, can I put you in? Who spoke now? Sarah.
Yes, Professor.
Okay, so you're going number 9.
All right.
Let me just
Ashraf, also
Okay.
you can add me. Ashraf.
Ashraf. Okay, Ashraf, let me just go and find you quickly. Ashraf. Ashraf, you're going number 10, eh?
Wellington.
Okay, who's going after Ashraf? Wellington? Are you going after Ashraf next week?
Okay. Yes.
Okay, so you're number 11, eh? Next week, I'll draft draft a sequence and also put it in the group. Then who's left is oh, Wellington, I've put yours at the wrong place. Sorry. Then Yusuf. I just want to see who doesn't have a slot. Exi. Ahmed Musalim. Oh, no, won't attend. Mansoor. Rhodas. And Winnie. Who of you wants to go next? Remember, it's an easy 30 points. And it's just that you've seen it's 1 or 2 slides. It's really so short. And if you can't do it in a slide, you can write it up as well on whether it's PDF or Word or what. Okay, who's going to go next? Winnie, I can see you on the screen, but you're not responding. Let me just go on the screen. Then Rhodas, I can see on the screen, but you haven't responded. Mansoor, I can see on the screen, but you haven't responded. And Ahmed Mosulam, I can see on the screen, but you haven't responded. I need to put your names on the list, otherwise you will not get your marks. Okay, so maybe they're not in the class. They're showing they're in the class. Okay, so let's go on. I will draft just a quick after the 11 people who's going to do next week. And then you can pre-upload it before the time, and then we start with that next week. Okay. Winnie will say, Winnie, please, my love, I'm very worried. You must please submit your assignments. I'm sending messages and you're not responding. I'm just worried about that. Please, please, please. Okay, Winnie, you're number 12 next week after Wellington. Okay. Then the others, well, okay. I'm going to share the presentations for today. Today is quite a lot of slides. However, it's not as hectic as it seems. I will go through with you, and whatever we can't finalize today on the finances, I will bring in extra for you on the last session for the exam as well. Okay, so let me quickly share. Let me just admit to the class. Sorry. Ahmed. Okay. Can you all see in front of you is the slide back?
Yes.
Okay. Thank you so much for that. Okay, so what I've put on here on top, you'll see this is okay. This week we are going to do a combination of 14, 15, and 16. It is a lot of slides, but you remember the way we work is the yellow stuff is the stuff that I will focus on. For this week, there are 2 assignments. The one is only going to be, I've said to Mpilo 25 points, but Mpilo make it 30 points. It's just easier for rounding purposes. Over the 3 chapters, there's going to be a quiz, so there's not another assignment. The other assignment is that those who have presented, submit your presentation, Ulina, so long so that I can grade it. Then the others for next week, just submit it before the class so that as you present, then I can grade. So it's not extra work, it is part of, we just create a little field so that we can put a mark in for you and you can upload your presentation. So it's not extra work. Okay, so I'm not going to, as I said, going to give the finance ratios, but the ratios I will give a simple example in the exam, which if whatever we can't do today in that exam one, we will spend about 30 minutes on that one so that you don't get afraid to say, oh, but it will I'll make it quite easy for you. Okay. So the first thing also, so this week, next week the class is we will do then the others who hasn't presented, and then chapters 17 and 18, which is HR and legal, which is not a hectic chapter. Then on the 13th of August, that is important. So that's the last week where you get your points for attendance. Remember, every time you attend, you get 2 points. And I think one or two of you who couldn't attend the session who gave apology to me, you then get 1 out of the 2. But it's easier to attend because otherwise you need to go and work through 2 hours and try to figure out where I give very clear guidance in class. Then the week of the 14th to the 20th is the exam week. As I said, it's still, we will prepare for you very, very clear guidance for that. But the one thing I cannot do, I can only do as much as I can to get you there, to get to remind you of assignments, but the actual doing is your part. Also for the exam is I can basically give you and set the questions that's going to come out of these slides. So many questions, quiz. This is going to be 3 options as an essay, of which you're going to get 1 as an example. And then this is exactly what you're going to get in the ratios in the exam, just different numbers and a different example. Not complicated, but simplify that. But what I can't do is I can't go through those slides for you, and I can't go and write for you. You still need to show up. But I don't think any other university or any other professor will try to make it so easy for you to really to say, I want you to pass. Okay. Any questions before I go on to the next slide? Sorry, if I drink water, it's just in the hoga is from the COVID is just making my throat dry. Okay, so then the next one is there you can see in front of you on the screen, like I do every week. Those of you who have done entrepreneurship last week, there you can see the blues and the reds are things that has been done in entrepreneurship. I've done it, either I haven't done it here, but I kept the slides in for you, or I have done it in a different way. Okay. Chapter 16, we're not going to get it even today. There's so little in that. I think there's 2 or 3 slides that I've marked for yellow for the quiz. Stuff that I have not marked yellow, really you can go through it in your own time. It's not going to be in the exam and it's not going to be in a quiz. Okay. Then, okay, chapter 14. Chapter 14 is focusing on using equity, debt, and gifts. Now, last week, we have worked on, so I've put this in as a reminder for you from last week. Last week, we have said your entire balance sheet and accounting and financial management goes around these 5 columns. Remember this, the colors here are with a specific purpose because it comes from a course called color accounting. And that's the way how we train also. I train my children when they have accounting at school, and also when we do accounting for entrepreneurs. So the two green blocks on the right, those is, if you look on top, it shows how you use your funds. Okay, you either use funds to build assets in the balance sheet or to pay expenses to run the business. Those two green blocks are normally debits in your accounting. You normally debit them. Then the three blocks on the right, those on top, if you can see, are your sources of funds. That means is where do you get the money from to use for assets or expenses? And there are three blocks. And the yellow is credit. You credit them because you must see at the bottom, there's a yellow, green, a yellow 50,000 as a source of funds, and then on the left there's a total use of the 50,000. Those two, everything in accounting must have a debit and a credit. It must balance. Otherwise, your balance sheet is not balanced, and it means that you either have missed one of two or both very important accounting and audit principles, which is accuracy and completeness. That means you haven't processed your things accurate, debit, so that it balances, or you have completeness. That means is you've put maybe the both on the credit side or both on the debit side, so therefore it's also not accurate and complete. Okay, where do you get your sources of funds from? It is, you either can borrow it, that's the liabilities, or the business owner puts money in the as equity in, or if you have profits from your income statement or losses, that will either build your equity if you have profits, or if you have losses, it will drain your equity on your balance statement. That is the purple block that goes in there to say the balance, the difference between your income minus your expenses will go into your equity, whether it is a loss or a profit. The only difference is if it's a profit, you're building equity in the business, which means is your ratio between asset versus liability is becoming smaller because of the equity that you're putting or leaving in the business getting bigger. So that is this in sum total what accounting is about. Very important, whether you in a business and have, let's say in a Siemens, and you run a small little thing, or whether you are a dad or a mother and you need to do your personal budgets or your personal income statement or balance sheet. Same principles. Okay. Then what we also said, I've just put this in for you as an example from last week. I've just put it in so that you don't have to go back the whole time to the slides of last week. Under each one, there's just a description to say, okay, so what is liabilities, assets, and so that also from last week. Okay. Then for you as a reminder, so we're not going to go through it again. We have put it in the slides and we've done it last week. What type of things are under assets in that big green block? What type of things are under liabilities in the top right small block? What type of things are examples of equity? And then what type of things are under income? What is important here, and that might be to say, can you apply, let's say in a quiz, in the exam? So this is quite important, is that you can read, there's 4 numbers, 1, 2, 3, and 4. Can you see that? Yes? No? Thank you, Lizette. So if you start at number 1, what it means is your income is an activity that 2, increase assets, 3, or decrease liabilities, to the benefit of the owners. That's what income statement mean. Why do you get income? It's either you're going to increase assets or you're going to use that income to decrease liabilities. For whose benefit? For the owner's benefit. Okay, so that's always simple. But if you can't understand what it means, then you have missed the entire meaning of the 5 blocks in a business. Then you won't understand why do you get income, because at the end it is to build equity for the shareholders or the shareholders / owners. Okay, so to understand that is quite important. Okay, then the same on the next one, the expenses. Yes, it's example of expenses, but what does it mean? There's 4 numbers again. 1, any expense is an activity that, number 2, decrease your assets, or number 3, increase your liabilities, 4, to the detriment of the owner. So it's this opposite of income. So income is to build assets and to decrease liabilities to the benefit of the owner, whereas expenses is decreasing the assets, increasing the liabilities to the detriment of the owner. So that is the difference that you need to understand between the two, because I might ask it in the exam in a way like, company A has a profit of, let's say, $50,000. What does it mean in terms of the 4 steps of an income and expense? That's 8 points. Okay, because you will need to know then profit means income was more than expense. That's what sorry, a profit means. And that means if there's a profit, the income was more than the expense. Therefore, there was more income to build assets, to decrease liabilities, and to increase equity for the shareholders, versus if there was a liability, then they would have had more expenses, and that would have decreased your assets and increased your liabilities to the detriment of the shareholders. That will be something in the practical, but I will go with you on some of these examples in the exam prep week. Okay, any questions or comments on this so far? I'm just recapping certain things and giving you guidance for the exam. Not okay. Then sources of the next slide is on sources of small business. This will be just for this week's. There might be something. Ollie, do you want to say something, or can I put your mic off? Let me just put Ollie's mic off. Okay. So this basically will just look at, so what are the sources of funding? Okay, so the one is receive of sources, and the other one is use of funds. There's a mistake on this, so let me quickly fix it. I'll show you now. Okay. You see, one can uncover it. So this is source of funds, and no, both. It's right. It's right. I'll explain to you why now. I'll explain to you what I thought I made a mistake on. Okay, so I thought the one must be use of funds, but no. Remember, equity and liabilities are those 2 smaller yellow blocks on the right of the big asset block, and assets is equal to equity plus liabilities. Now, equity, that's the top one, is a source of fund coming from what the owner put himself, or all the profits from the profits or losses from the income statement. Sorry. Whereas the second one here is your liabilities. That's from borrowings to the business. And then the third one is the use of funds. And that it's the debit, and that's just building assets. So if there is something like that, remember the 3 blocks. Yellow, source of funds, equity. Source of fund, the second yellow block, liability. And the third block is usage of fund, the green one, assets. So those are normally the sources of funding. It's a summary of the 3 blocks on your balance sheet. Okay, so then just picture in your mind the 3 blocks. Assets, big block, equals liabilities, equals equity. Okay, any questions on this before I, or comment before I go on? Okay, because we have it's a lot of slides. Okay, then I've not marked anything in financing with equity. You can go through that. Financing of debt, that's just a quiz question. What are the, let's say, a question around what is, give the definition of, let's say, secured debt, and ask then, Mpilo, are you making notes here as I go on? Mpilo? I can't hear him on the, can you hear? Are you making notes? Okay. We will give a definition to say, okay, this is, let's say, provides a lender with the right to seize specific assets. That means it's a secure debt because the lender has a right to seize that. Because when they lend, let's say Matar had to get a machine for washing his eggs in his business quicker, or for packaging. That means is when he bought it, he either bought it unsecured or secured, or through own funds equity. But if he has bought it from a lender, so let's say a family member gave him the money, but he needs to repay that. A family member didn't say, Matar, if you're not going to repay this, you must give that machine back. So then it's unsecured. But if you go to a lender where it's a formalized process and you do documentation with them, and you default on a payment, then they can, then it's secured. They can seize that asset to recoup their debt. That is secured. The rest, I'm not going to go in. Financing with gifts, I've not touched, so don't. You can go through it in your own time. Then view from equity capital from the investor's point of view. Okay. How do they decide to look at what type of things? There might be a question on some of that, but I've highlighted the one is you must produce a gain. That means they want to know, what's my return on investment? What's in it for me? Okay. They will look at your risk, and they also will look at can you diversify? So let's say, and I'm using Matar now again. Let's say Matar, and I'm so glad you're happy that you're here, Matar. So let's say Matar again go to the bank and he want to now scale his business and he want to get a packaging machine. They will look at his financials. They would look at his ratio between his assets and his liabilities. And if they see the cash flow is okay, but can this business grow that it really needs such a machine? So they will then say, okay, but how can you diversify? And diversify, yes, it's more in marketing, but to say, can it be geographically diversified? Can it be in product and service diversify? That means, can you do something differently than from what you're doing now to give us an indication that there is a growth potential from that. Okay, let me just. Okay, then the next one is methods to obtain equity capital. So the first thing that you remember, equity. Two things must come to your mind. Investor, investor, shareholder, owner. Money comes from that. The second one is profit or loss from the income statement. That is the two things. So I've highlighted the three items for you. So how do you build equity? Yes, first one is by cutting costs. Because if you cut costs, I just want to see somebody's mic is on. Matar, I'm just putting your mic off. If you cut cost, that means is your profit on your income statement is increasing, and therefore the amount that goes from your income, the profit amount from your income statement goes to your equity increases. And if equity increases, liabilities decrease. Why? Because assets equals liabilities plus equity. And therefore, if your profit increase and your assets stay the same, therefore you'll say your asset minus your increased equity. That means your balancing figure is your liabilities. Your liabilities then should decrease unless your asset number has changed. Okay. Then the second one is, so please remember, if anyone wants to give accounting classes to help with finance and the other thing you do, I'm more than willing to offer some of my time for that, because I really love this. The second thing is, how do you increase your return from your employee expenses? That's the same thing as overheads. Overheads is a different expense. Employees is just a different type of expense. As you reduce overheads, how can you reduce employee costs? Because it has the same effect from the income statement to increase profitability to
Excuse me,
build
Professor.
equity. Yes?
Hello.
Let me just.
Yes, excuse
Yes,
me.
Ahmed? Ahmed?
Yeah, unfortunately, I have to go right now. I will catch up on the recording.
Okay, perfect.
Okay.
Thank you, Ahmed.
Thank you so much.
Okay,
Have
have
a
a
good
blessed day. Thank you. Okay, the same with the number 3 and number 1, 2, and 3 is cost related. You can see operating costs, overhead costs, employee expenses. Everything is on the green expense block as the use of funding. Reduce costs, improve profit, improve equity. The fourth one is maximize the results of marketing. If your marketing goes up, your sales goes up. If you manage then your expenses, that means number 1, 2, and 3, that means you can hopefully exponentially increase profit. Anything links to profit, increase equity. Okay, so that's in a nutshell. Expenses and income is what you need to remember from here. Any questions or comments from that before we go on? Not, okay. Then on the next one, angel investors, that's just a definition.
I have one question. One question. This is Matar.
Yes, Matar?
Regarding the previous slide.
Yeah.
I just couldn't understand well. They maximize the return from employee expenses.
Yes.
All others are okay. I find, and I got the idea about it, but how to maximize the return from employee expenses?
For example, let's say you have a budget, okay, on a project. Now you've budgeted for X amount. So let's say employee expenses on they call it resources on your project is 100,000. Okay. Now somebody went ill, but let's say now I want to use an example. Let's say Izzat is on your project and his salary. Now Izzat suddenly went very ill. Now that project goes on. You need somebody needs to do Izzat's work. So let's say, for example, you now need to pay somebody else overtime, or you need to get a Krista as a consultant in to come and help while Izzat is on sick leave. That means is extra overtime, extra contractor or consulting fees, less profit, because you have now extra expenses that you have not budgeted for. So therefore, it is very, very important that your budgeting is right, and that your resource management is also right. Does that help, Matar?
Yes. Okay. Thank you very much. Thank you.
Thank you. And I'm so happy that you are back in action. Abulela, I see your hand is up.
Yes, I was just going to give an example for maximize return to employee expenses.
Okay.
Actually, it's happening with me and Dr. Muhammad Izzat now, because
Okay.
we are replacing actually 6 people. So we are working their job. I'm working instead of 3 people in addition to my job, and he's working his job and another 3. So the company is maximize the return from our salary.
Sure. Do they pay you guys extra overtime and those things?
No.
Okay.
They are
In
just
South
using us.
Africa, okay, so in South Africa, that's illegal. But I'm not sure, that will depend from country to country. But that's maximizing, but it's also not right. You always take the willing people, the good performers, to stand up and step in, and you're not giving them some recognition for that. Thank you for that example, Maabulela. I am really sorry that it happens with the two of you, but you know, at some stage one also need to put a boundary in place. But maybe they're very good, and they, instead of overtime, they give paying for courses or degrees or stuff. Only the two of you, I must know. But very good example. Very good example.
But it's timed till they hired a new 2 people to cover the work. So it's temporary, but they are maximizing the return.
That's the corporate animal, eh? That's the corporate animal. Okay, then also on the next one, all what you must know is what is an angel investor. So there might be, because we're trying to make it simple. Yusuf, I'll come to you now. We'll try to make it simple and quick in some quizzes. So that's the only thing you need to know there. Yusuf, your hand is up.
Yes, Professor, I just wanted to add to this point. So some companies don't give overtime for some specific, like managerial positions,
Okay.
but they give bank days. So bank days means,
okay.
yeah, when you work an extra day, you can get it later as a day off.
Okay, wonderful, wonderful.
Yeah. So in the company I work for, they don't give overtime for managers. So they give it for hourly paid employees only. But for managers, because they are salaried, they don't get overtime, but they get in lieu days. So which means if you work like 2-3 extra days, you can take the days off later on.
As long as they approve it later on. When I did my articles, I did that, and when I wanted to take it off for my exams, they said nope. So as long as there's a integrity in that, they will actually agree to that. Okay. Yusuf, while you're on the line, I've put you on number 13 to present next week your value proposition. Okay.
Okay, sounds good.
Okay, thank you. I'm so glad. Thank you for that. Okay, then the next thing is just the yellow things. Is these things are for quizzes. So I'm not going to go through these things. You can read. It's just to say what are the 3 primary reasons for equity outside your business. So I've just highlighted that. So that might be for a quiz. Then the next one is, this is quite important. Just remember the 4 C's. What are the 4 C's of borrowing? And for a quiz. So I've just highlighted that for you as well on slide 20. Then on slide 21, this one is just a little more detail on the 4 C's. Which you can go and read through so that you just have an understanding. What is the owner character? What are they looking for? Capacity, condition, and collateral value. That's slide 21. Then the next slides, there's nothing except slide 26. Can you see in front of you the type of what type of financing is right for your business? Can you see that?
No.
Yes? Not. Then I went too fast. So maybe it was a lag time. So let me quickly go and share. That's a good thing while I always ask. Okay, can you see it now in front of you?
Not yet.
Not yet. It's a black screen.
I wonder why. So let me try again. Okay. Okay. Oh, somebody's mic is very. Can you see it? Wellington, I'm just putting your mic off. I'm not sure if you're talking to someone else. Okay, can you see it now in front of you?
Black screen.
Yeah. No, it's okay.
Okay, let me just unshare and share again. Okay, what do you see now? Do you see a slide deck? Yes or no?
Black screen. Black screen.
I can see.
I can see the screen as well.
I really can see.
Can you see what type of financing?
Yes, Professor.
Yes.
Oh, hallelujah. Thank you. Okay, so all what you need to know here is the cost of equity must be bigger than the debt. What it means is on those 3 blocks: asset, liability, equity. That means is your equity block must be bigger than your liabilities, because the bank is going to look at the ratio between assets to liabilities and equity to equity. Now, in the Katz book, they refer to that the ideal capital mix must be 70% equity to 30% debt. Okay, so I've highlighted there for you. Then also number 3 for a quiz is to say, what is financial leverage? Or give a definition and to maybe mix that up with financial leverage, optimal capital structure, and financial risk, so that you can choose one. So number 3, 4, and 5, just know the meaning of those things, because that will be in a quiz. Okay, so just make a note somewhere for you of that. Any questions or comments before we go on? We're going to take a 5-minute break now. Okay, let's take a 5-minute break, because I want us to go into some ratios after this. Okay, let's take a 5-minute break. Sarah, you just in time for the break. We're going to take a quick 5-minute break. We'll start in 7 minutes, just to round it off, 4:15 South African time, but 4:15 in 7 minutes, we will start again. Just for those of you who haven't heard, we're taking a quick break. We always do it plus minus halfway. We will start 1/4 again. Okay. Okay. Are you all back? Are you all back?
Yes. Yes.
Yes.
Okay, thank you. Okay, so we're going to go quite fast through the others, so that I'm only going to highlight certain, because we all can read, and I don't believe on Death by PowerPoint, but I didn't take out any of the slides because that's the cuts thing, but I have highlighted the things in yellow for you, which you need to, that either will be in the quizzes, but as I said, I will narrow it down very much for you for the exam, so that you don't have a mass of stuff that you need to go and work through. Okay, now just this, all what you need to know here are what we're going to do now is number 4. We're going to focus on on the ratio, current ratio. We're not going to in this course do the debt to equity ratio, but that's quite easy. We've seen the previous one. It should be around 70 to 30. Okay. Then also number 6 is, when does profitability ratios becomes important for a quiz? It is obvious to when a company reaches break even, then profits become more important. Okay. When does leverage ratios become important? Is when you look at the long-term success of the company. So just from a quiz perspective, that might be in there. Then I need to click. Then I've not marked anything on the next slide, and that's the end of chapter 14. We're going to run quite quickly through 15 because I want to start touching on some of the ratios, which I want you to go through. Whatever we don't finish today, I want you to go through in the slide pack for next class as well, so that we take another 30 minutes on ratios. And then in the last class, we will spend also 30 minutes, but on how and what you need to prep for the exam. Okay, because we're not going to do difficult stuff, because this is not a financial management class, but there is an introduction into certain important principles for business, whether small or big. Matar's hand is up. Matar?
It looks that I have a problem because I cannot see anyone. I saw your small picture, but I cannot see the presentation or I cannot see anything. I switch it off or I turn it off and I turn it on again, but it is not coming. I don't know.
Then, Matar, go to the WhatsApp group, the intake. I have posted the PowerPoint presentation in the group in a PDF.
Yes, yes, I saw it, yes.
I opened then the PDF, and then you go to the slide, and then you just follow me on there. Okay.
Now I can see it. I don't know what happened. But now
can you see
it
now?
looks that I can see chapter 15, asset, inventory, and operation management. This is what you are showing right now?
Yes, yes.
Great. So I don't know what happened, but I can see it now. Thank you.
As long as that's, thank you so much. Okay, so in chapter, I just want to admit, Abulela. So in this chapter, if you go to slide 33, that's the next one. Accounts receivable, just now I've made it in yellow for you, is also known as debtors. And that is under your current assets on that green block on the debit side of your balance sheet. So I've typed that in for you because it's not everybody that knows or who's working with finance the whole time, so that you just know that. Okay. Then accounts receivable, that's your debtors. That means it's the services that you've have produced income, you invoiced invoices to people for your service and products. So let's say Matar sold eggs, but they're paying him on 7 days. That means on the income statement, he's going to record the credit as the income, but on the balance sheet, he's going to record it as a asset, because those people, his customers, owes him the money. Therefore, it is under current assets, which means current means in the next 12 months he needs to receive at least that money. Okay, so I've just highlighted that for you. So an accounts receivable are, as I said, these people owe you the money. So therefore it is a asset to you. Okay, the rest is you can look into the cons and pros for a quiz, so that you can just make a note of that. Then let me just check quickly the ones, the ABCs of extending credit to customers. I've not highlighted because I don't want you to memorize these things. You can just read through that. The same for usual accounts receivables. That means your debtors as a source of funding that you can also go through. Then managing inventory, you also can go through. Then on the next slide, can you see on there's a yellow in the middle? This is slide 37. It's the economic order quantity, or in brackets, EOQ. Can you see that in front of you?
Yes, I can see.
Okay, thank you. Now, that definition is definitely going to be in a quiz. So what is an EOQ, or economic order quantity? It helps you to think in terms of ordering your costs and your carrying costs. So that, let's say, for example, Matar buys boxes, and his box, it doesn't sell enough eggs. That means he has a carrying stock that he had to pay for. He had to reduce his profits, but he hasn't got money in that for you. So it's that's called a carrying stock, but it's not. It reduces your equity there, but it also will reduce your assets under stock or inventory. So that means the 70% assets is increased, and the 30% equity is increased. Not 70% assets. That means your 70% equity increase, and your liabilities depends of if Matar bought it cash or on his credit card or on debt. Will upset the 70-30% ratio between your equity 70 and 30 liability to assets. So that's why it's very important to understand the cost of carrying cost. So the first one is your cost to buy the inventory. As I said with Matar, it's the cost to store and protect that. For example, if Matar needs to rent a room where he needs to store his stock in, that is a cost that needs to be added to the carrying cost that will impact his profitability. And then thirdly, the costs of making an order to purchase inventory. So those are the things that influence your carrying costs, and that means you are holding stock that is not bringing in money yet. You have to pay expenses or to incur debt to buy that and hold the stock, but you haven't converted it to money, the income. Okay, so that will definitely be a quiz question. Then there's a little more for you if you want to read on the ordering inventory and carrying inventory, which is not going to be in the quiz, but to understand EOQ, you need to understand a little more about this. So it's important that you understand that. Then, as I've highlighted for you, can you see in front of you is a figure 15.1? Can you see that?
Yes, it's clear.
Okay. All what you need to know is the yellow portion. The rest, remember, if I say all you need to know, it's not to say for your own learning, you mustn't go and do that. You always, that's a choice that you need to do. I'm guiding now for, because you all have time constraints for quizzes as well, is when you take your carrying, that's the yellow, the cost of your carrying inventory and your ordering in inventory. That means is inventory that somebody has now placed an order with Matar. So that means that order means X that he needs to hold for a day or two. That's the ordering inventory, and the cost of the carrying is, let's say, the boxes, the wrapping material, those things he bought before the time. Now the cost of those two together plus the purchase price. So those three together, remember the words carrying, ordering, and purchase. Those three together gives you your EOQ, which also stands for, back to the previous one, your economic order quantity. That means is that's basically going to be equal to your, what is the break even of your inventory. This is inventory. That's not yet Matar's cell phone to sell, his time to sell. This is the break even of in the inventory. Okay. Then can you see on the next slide also there's a block that starts with the EOQ tells us. Can you see that?
Yes.
Thank you. I just want to make sure that I don't go on and you guys see something else. So what does the EOQ tells us, apart from what the other slide said? It says how many units you must order and how many orders to make. But it doesn't tell you when to place an order. Okay, so it gives a, and that is determined by your rate of sales and the time required to receive new stock. Now, there's another terminology also called, and this applies to, it's not only Matar's business, or it's any small business, big business. These terminologies we also teach when we do supply chain to companies. They need to understand, or those supply chain practitioners, they need to understand what is the optimum stocking level, and what when is the reordering point, so that they don't have too much stock, but they also don't have too little and lose sales. Okay, and therefore they refer to that also to say, what is your safety stock level? That means not too much, not too little. Okay, so that your business can flow. Okay, then I'm not going to go for the level of entrepreneurship. We don't have to really go into depth into just-in-time systems in inventory, because those are things that you should address in more detail in your supply chain module. Okay, I've just put it out there so that you can take note of that. Then, very important for a quiz, what is the difference between periodic inventory and perpetual inventory? Okay, periodic inventory is the physical counting of assets on a set schedule. So in business, we refer to it, I need to do stock take. So normally at year end or month end, so that they can determine the stock level physically counted versus what's on a system or what's on your Excel spreadsheet, so that you can identify where there's any inaccuracies or variances, so that you can adjust that. Because if your stock is not right, that means it's your asset amount in your balance sheet is going to be inaccurate. Whereas perpetual inventory records as you receive stock and as you sell the stock, record that as it happens in real time. Okay, so just difference, it's just you need to know the terminologies. Then the next one, sorry, what is the value of your assets? Very simple. It's the sum total of your current assets plus your non-current assets, meaning current assets, everything that you put like cash, stock, debtors, anything that you can put in liquid, liquidity form, flow of money, that's the liquidity. In 12 months normally goes under under current assets, and everything not, let's say land and buildings, your laptops, your vehicles, those type of things you will put under non-current assets. The non-current means it's not now, it's not within the next 12 months. That's all that you need to know. Value is equal to current plus non-current assets on your balance sheet. Okay, I want to get to the ratios because we won't get to everything. Okay, we're going to, part of asset value as well is like fixed assets, your car, your house, your, let's say in business, you have laptops, you have vehicles and various things. Now, there's a few terminology that you need to understand. The one is, what is your book value of your asset? So these are all quiz questions. What is your book value? That's the difference between the price you paid for it, your purchase price, and your accumulated depreciation. All countries tax departments give specific allowances for how can you write off or depreciate the value of a vehicle. Now, in South Africa, we have, and we're going to come to an exercise of that, which definitely I will put a simple one in the exam potentially. So the first one is, what is the book value? The second thing is, what is the disposable value? Okay, that means is if I can, no matter what my book value is. So let's say I purchased something for 10,000 and it's quite new. And my accumulated depreciation is 2,000. So that means the book value on paper is the 10,000 minus the 2, it's the 8,000. But now somebody come tomorrow and say, I know it's 8,000, but I'll give you 12,000 for that. That means the market price, that's the disposable value determined by the market, of that is not 8,000, then it's 12,000. So that is what's referred to as disposable, as if you can sell something at arm's length, and that means you don't manipulate the pricing and do things you shouldn't do, is what will the market pay for that. The replacement value is, let's say for an example, in COVID, some of the entrepreneurs we develop at transport businesses. So the one lady had a truck, which she paid quite off a lot per month. And then in COVID, she had to decide whether she will put food on the table, or I'll come now, or whether she will use that money to pay for insurance. So what does a mother do? She lapsed the insurance because she had to put food on the table. What does the universe send her? Somebody stole the truck. Now, does the bank give a damn about it? No, they want their repayment every month. So that means the replacement value. So she had to keep on paying for that, but now she suddenly needs to replace that. Is what is currently the cost to replace that asset, and that's replacement value. Is that, I'll come to you now. And then the fair market value is the difference between the disposable value and the replacement value, and that is referred to as the fair market value. Is that?
I'm so sorry. I want to just to ask about the slide that then you bring next slide, because I thought that it's a freeze
This
before
one.
the previous one.
This one.
Thank you.
This one.
Okay.
This one. This one.
Okay,
This one.
you now. Yes, okay.
This one.
It was
Is that? I
freezed
just
before
need to...
the previous. Now it's working. Thank you.
Okay.
Thank you.
Okay. Thank you. Okay. So what I'm going to, I think we might not have too much time after today, but what I've added for you is, there's nothing in the quiz here, but I want you to understand in terms of accounting practices, there are normally two accounting ways of depreciation on assets. Remember here, the book value is what you've paid for it minus what the tax laws say you can write off. Now, where I've put in let's say a rand value here, a ZAR for South African, you can just replace it with whether it's dollar or euro or whatever your country is, because the principles stay the same. How in terms of accounting certain things are calculated. So there are two. Can you see in front of you as a screen depreciation on assets? Yes or no?
Yes. Yes.
Okay. So I just want to show you two things. That there's a difference between, they call it the straight line method and a reducing balance method. Now, I have not met a single small business that is using the reducing balance method. That normally goes in more with a little more complicated, Sarah's coming back, a little more complicated accounting policies or accounting policies, accounting principles that is adopted in bigger companies. Your bigger companies, let's say whether it's Siemens or your company, they might decide to do certain assets on straight line method and certain assets on reducing balancing method. Okay, now I've put in both here for you and as handouts. However, because this is not a finance class but a small business administration class, I'm only going to go through it with you in the straight line method. But on the next slide, I'll explain to you just what is the difference. Because it's not a finance class. So normally when we teach finance for non-financial practitioners in supply chain or for entrepreneurs, and we do a 2-day finance class, then we will teach them the differences. But I've added it in. So this slide and the attachments, I've attached it for you, is the straight line method. So for example, this is very simple. Go to the first blockie, there's finance for procurement professionals. So that's what we teach them as well. And for entrepreneurs, the straight line method. So in this case, is let's say Matar buys a vehicle to transport his eggs to his clients, and the purchasing price, the cost price, was 220,000. We're excluding VAT now for the purposes of these examples. Now the residual value is 60,000. That means Matar is going to pay it off over 5 years, but they call it also a balloon payment. After 5 years, he's still going to own, let's say the bank, a residual or a balloon payment of 60,000. And the accounting practice of the country to write it off allow for 5 years straight line of they call it the useful life of the period. Now, what do we know? 100% divided by 5 is 20%. So normally your tax legislation will say 5 years or 20%. So in this case is, but if you don't know how to calculate it, then you take the 100%, divide by the useful life of the asset that is allowed in the accounting practice, and you will divide it 100 divided by the 5, that will give you 20%. What is the first step? So remember now, for the book value that you're going to put in your balance sheet as a big business or small business, you need to have the calculated depreciation. Why? Because the depreciation every year can be included as a book entry to, under expenses, and that will reduce your profit. But it also will accumulate in your balance sheet to reduce the value of your asset over its useful life. Now let's, first example at the bottom, there's depreciation. So cost of Mataar's vehicle is 220. What is the balloon payment or residual at the end of the 5 years? The bank said, Mataar will do it for you, but you can't afford the payment, so therefore we will do it for you to make it affordable for you with a residual or a balloon payment at the end of the 5 years. So then Mataar takes the cost minus the residual, and that is called the depreciable amount of that's 160. Okay, now the straight line method is easy. You take that 160, divide by 5, because that's the useful life period that your accounting or your country's accounting principles allow for the vehicle to be deducted. So you can't decide on that. The bank can't decide on it. This is decided by the tax practices and tax laws of the country. Now, go to the top block, your income statement. So what happens now? That 32, that 160 divided by 5 means every year for 5 years, Mataar can debit his depreciation expense in his income statement with 32,000. He can write every year depreciation of 32,000 Rand in his income statement to reduce his profit and tax payable. That's the one side, that's the income statement. The other side is the balance sheet. So now we have a debit. So remember, every debit must have a credit. So now we have debited every single year. Mataar has debited his expense called depreciation. But now he needs to credit something every year. Otherwise, his balance sheet is not going to balance. What does he credit? The asset, because the vehicle gets less valued, lesser and lesser every year with 32,000 Rand. That is the second block, to say in the first year, you start with the cost, the opening balance, minus the year 1 depreciation, the 32. That means at the end of year 1, Mataar in his balance sheet for that vehicle's asset now will reduce from 220 to 188. Now that is now his opening balance for the second year. Now the second year, Mataar knows the country policy, so he can deduct another 32. That means the closing balance of that asset for the business, the end of year 2, is 188,000 minus 32,000. That means Mataar's vehicle is now valued at 156,000 at the end of year 2. And so you go on. End of year 3, opening balance 156 minus the allowed 32. End of year value in Mataar's balance sheet is 124. Year 4, Mataar deduct another 32. So the value of that vehicle in his balance sheet for the business at the end of year 4 is 92,000. Now Mataar knows the law only allows him as per this example, another year. So in year 5, it deducts the 32. Then what is the balance? It's the same as his residual. Now, we're not having an accounting class, so we're not going to say, okay, what if he sells it in that time, or he do this, because that's other type of things. But all what you need to understand is whether it's big business or small business, the asset that you buy is building your balance sheet. The depreciation that is allowed is reducing your profit, and that this is how you calculate it on a straight line method, which is used by the majority of smaller businesses. Any questions or comments on this?
Yes, Professor.
Oh, and please mark this because it's so easy. I will definitely put a potential thing in the exam, maybe around this. Ashraf?
Yes. Normally, what's the period, the suitable one for the machines or for the production lines? Should we consider 5 years, 6 years, 10 years?
It depends what your country's tax laws say. In South Africa, and we fall under international GAAP. Abulela, I'll come to you now. We fall under international GAAP. So you need to go and see what does the taxman say. So you can't go and do your own years. If the taxman say motor vehicles can be deducted over 5 years, then that's what then you know it's 20%. If the taxman say laptops are normally deductible over 3 years, then you know 100 divided by 3 is 33.33 every year. That means your calculations is going to be based on that. If the taxman say this is a vehicle over a certain capacity machine, needs to be deducted like that. So you can't make your own things. You must go and look what is the tax laws of the country where you are operating in and what are their allowances. But GAAP, normally, that means the international code for accounting normally has an alignment between these principles. But first go and see what does your company law require, because that will be what you need to use. Does it help?
Okay, I understand. Yeah, I understand. Okay. For this one, for the vehicles, because maybe they cannot make the license or the government it doesn't allow it to move anymore in the streets. But what about the machines? The machines, it lasts.
Doesn't matter. You need to go. You're only allowed in terms of this is you can't make your own rules. You must follow the rules of your taxman.
Okay. All right. Good. Okay. Thank you.
Okay, because even if you submit it and it's wrong, they will flag you for an audit, and you need to fix it. So I'd rather make sure that you understand the allowances of the tax laws. Okay, Abulela, your hand was up.
Yes, I was going to say the same as you said, Professor, that there is financial guidelines. I don't know, I don't recall the name now, that have the definitions and have the fixed assets and the depreciations years. That usually is the general guidelines, not essential to take it, but it's general guidelines. So for machines, our factory is 10 years.
Yes, those things are normally 3 years normally.
Laptops is 3 years, but our company is 5 years. Okay. So there is a range you can use. For factory, it's from 10 to 15 years. For machines like laptops and whatever printers is from 3 to 5 years. Depend on the company policy or what.
Yes. And your company policy will normally follow the government policy, the taxman policy.
Actually, we don't have taxes here.
Oh, you don't? We need to come live there.
Yeah, we don't have taxes.
Yeah. Okay, that's fantastic.
That's why most of I'm living in Saudi Arabia now. I'm working in Saudi Arabia. That's why most of the companies are coming here. Most of the players worldwide are coming here because there is no taxes.
So that, wow. Okay. You can create spaces there for us to come and lecture or do stuff there. Eh? I'll move. Okay. Thank you so much for that. Any other okay, so on this one, so this is very simple. So I might give something small like that for the exam. The next one is not applicable to small business. Can you see in front of you the reducing balance method?
I can see.
Okay, thank you. So that one is just to illustrate to you if a country's or internationally, if you belong to the to GARP principles, which is generally accepted accounting principles, then those things normally would be aligned. But oh, you guys are so fortunate for not having all these laws. I don't want to call it nonsense, but it's, you know, so much of our money you just work for tax. Okay, so the difference between this is, and this is, you don't have to be able to do it. I just want you to know the understanding the difference. Where the previous one, the straight line method, means you would have said the 220,000. So let's say there's no residual. The 220,000 divided by 5. That's straight line every year the same. On the reducing balance method, what you do there is, for an example, just the first block is that if that Matar's vehicle is 220,000, and we know that there's no residual, and the useful life is 5 years, then we know it's 20%. So the difference here is you would have, say, taken the opening balance, the cost in this case, times 20%, which in this case is the 44,000 in year 1. You would have deducted in the income statement the 44,000 as a deductible, but you also would have deducted that amount then from your asset. Now, if you look on just on the balance sheet, just look at there below, the cost was 220, we've deducted now 44,000. That means the closing balance at the end of year 1 in the asset for this business, which is the same as the opening balance for year 2, is now 220 minus 44. What then happens is, so what do? You say the 176 times 20%. What is the depreciation? It's the 35,200. You deduct that from the value, and it will give you a closing balance. And that's how you go on. And you can see on the right, you go on like this, and over 20 years, this asset is not yet written off. So that is the difference between straight line, that means, whoops, over the lifetime, it's done, versus reducing method is until the value is written off. That is the difference between the two. But small businesses, those in countries who pay tax, definitely I've never seen anyone using the reducing balance. That's more in big organizations who need to submit for taxes. Okay. Any questions on what you observe between the two differences? Comments? I think, okay. Then I just want to go, we're not going to finish everything. Remember, chapter 16
Professor,
is about Abulela.
yes, there is something in the income statement called accruals. That's I am holding some money for example, accrual for indemnities, accrual for whatever. It's written in the income statement at the first of the year, and it's settled at the last of the year, at the end of the year, if not paid.
Yes. So this
is it debit or
not
credit?
Accruals, it depends what you credit. So, no, okay, give me an example of a specific accrual.
Okay. For example, accrual incentive for the people. It depends on whether they achieved or not. Okay. So when
Okay,
I'm
like a
making an income
performance
statement,
bonus.
yes. So
Okay.
I must put
So,
it in my income statement while I'm forecasting, and at the end, the finance calculated.
okay, so what you do is on an accrual. So let's say that, for example. So the one thing is, remember, I just want to share quickly here. Then it's easier if I show that specific. It's always easier to explain it on this five blocks. Let me just go through there. Okay. Okay. Can you see that? Can you see that 5 blocks in front of you?
Yes, it's 5
Okay.
blocks.
So what you would do, so let's say now at the end of the year, you need to make an accrual for performance bonuses that only will be paid after year end. So let's say year end is end of December now. So let's say that's now the year end of December. What you then would do is but you're only going to pay out once the board has signed off the finances. The bonuses only will be paid out, let's say next year, March, for example. Now,
Yes,
end of
exactly.
December. So end of December, you debit let's say salaries. Under salaries, there will be a category bonuses. Okay. So you debit your expenses. That means you reduce your profit, and you credit your under your creditors. There will be accrual or provision for bonuses, or for pension, or UIF, or anything salary related. So your debit is going to be under expenses, so it reduces your profit and your equity, and it increases your creditors. Now, coming March the next year, you can't go and debit your expenses again, because then you double dip. So you now going to pay the people the performance bonuses. So you're going to say, where do you pay it out? Out of your bank. So you're going to credit your assets, your bank. And if you have money in the bank, you're going to credit your assets, your bank, and you're going to debit that accrual under liabilities to make that accrual less. Okay.
Okay.
But
What
let's.
if the accrual is not balanced? Example, the accrual was $1 million, and
Hey.
next year 806,000 only.
Okay, so let me share an Excel spreadsheet. Okay, that's then I can do it on that. It's easier if you see it visually. Can you see an Excel spreadsheet in front of you?
No.
Okay, let me share that. I thought you could say no. We only see you. Okay, so let's say, for example, can you see it now? Excel
Yes.
spreadsheet? Okay,
Yes, yes.
so let me just take all these. Sorry, this is a playbook for when we teach accounting. So let me just take all the numbers quickly out. Let me just take all the numbers out. Okay, so let me just take this out. Okay, let me just see that there's nothing else in there. Let me just take everything out. Okay. So now you need to tell me if you can see while I work. So what you say is, at the end of the year, you're making an accrual. So let's say now it is 1 million. It's 1 million. Yeah, 1 million. So you debit your expense. Can you see we have debited?
Yes.
Okay, so you debit your expense. Now in your balance sheet, you credit, you create the accrual. You credit your liabilities or your accruals. Can you see both of them are balancing out? So
Yes.
that means is in your balance sheet at year end, your equity is going to be less because now you have R1 million more in expenses that reduce your profit, and your liabilities is R1 million more. Okay, after year end now you pay performances. So let's say now you pay $600,000. Let me just take one out. And you see, I've put there under liabilities, I have put in there 600,000 amongst the accrual. Can you see there? I've debited it.
Yes, I see the 6,000. 600.
Okay, now, thank you. So now you're going to credit your, because you have a debit now, you're going to credit your bank. You're paying it now out of your bank balance. So you have a debit and credit that balances. Can you see that?
But where is the difference?
Okay, let me make a different colors. Okay, let me make a different colors. There is there's the blue. Can you see? You have the previous year, you've created the accrual of the R1 million on the credit side, and you've debited your income statement with this under salaries of R1 million. Can you see that one?
Yes.
Okay, now after year end, now look at the blue one. Let me make it a little bigger, if that will help you. Okay, after year end now, you went and you paid that. So there's your bank. I'm just going to make it blue so that you can follow me. There's your bank. So you paid out of your bank now on the credit side, because if you make payments out of your bank, you credit it and you pay out of your bank the 600,000. Can you see that?
Yes, I can.
But now you need to debit. Now you're going to reduce your accrual because you don't have that, you don't owe that money anymore. You reduced on the debit side your accrual with a $600,000. Can you see that one?
Where I can? Which one?
There, under liabilities.
Okay,
Under
I see.
liabilities.
Yes, debit. Yes, yes.
Okay, so there's your debit. So now what you're asking is, there's still the balance between the million and the 600,000 is 400,000. So that means you have an over accrual. You've there's not enough people that performed to get bonuses. So what you need to now do in the new year, and I'm going to make it a different color. I don't want to, can you see there's a color? Now
Yes,
you
yes.
say, you need to clean that accrual now. So you're going to say, I'm taking the 400,000 out of my accrual there. I'm taking so that my accrual now is clean. But now you have a debit. What do you do with a credit? That means the previous year when you deducted from your expenses R1 million, there's $400,000 that you overestimated, 400,000 too much that you deducted from your expenses. That means now you write back the accrual. You debit your accrual to clear it, that's the debit, and you go and credit your expense, your salary provision. with the 400,000. That means where last year you've reduced your profits. This year you're writing it back because you didn't use that expense that reduced your profit. So you're putting it back into your equity in your new year. The same with any expense, whether it is cell phones or stock or whatever, is the same principles before year end and after year end.
Okay, and it's considered as rolling. So it be considered the next year also, because there will be another accrual at December.
Then you just repeat the process. You go and put,
Yes.
oh, okay, last year we've had a little too much accrual. So this year you might put in, let's say, a blue one there. I just want to put it in there. So this year we've learned now, no, we're not going to put R1 million again. We're going to put 600,000. And now you, at the end of the year, you're creating that accrual again under between your creditors and your expense.
Okay.
Okay. So
thank you, Professor.
you make anytime, and really you guys can talk to I'm really more than willing. I love accounting. Anyone who wants to do the accounting and do the financial management before that, and to help you in those courses, you can maybe talk to Sarah and them to see if one can do a series. I'm willing to give some of my time for that. Okay, any questions? Because what Apolelo said is, this is going to how you do anything, whether you pay transport or anything is going to have book entries like this, whether you use a computer system or not. Always something behind the computer system is going to do these book entries. Okay, I just want to close out quickly by going back to the slide so that I don't leave you in the air there, okay? Can you see the slide deck in front of you?
Yes.
Okay, so Mpilo, I will just let you make a note as well for our quiz. So up to the quiz, because I'm not going to ask you something we haven't done. Up to the quiz, you only go up to slide number 49, okay? What we will start with after the presentations next week is physically, I want you to go, we will start, can you see in front of you is the payback period? Okay, thank you. So what we will do next time is we will start with the payback period, go through that just to help with understanding. I've put a few slides in there. Then you can go through the rest. You can see not very much is marked. Then we're going to go quickly into ratios, which is from slide 68 to slide 91. Because at the end of the exam, I will focus next week and the week thereafter. You're going to get something like this. Okay, I just want to share that. Can you see in front of your exam, not ratio analysis? Can you see that? Okay, thank you, Lizette. So in the exam, I'm going to give you, I'll just type it nicer, update certain things, put dollars in and make it that it's easily readable. You're going to get a small little income statement like this. You're going to get a small little balance sheet like this. Then I'm going to give you an example to calculate the certain ratios like this, which I will give you the formulas, like here, the formulas are there. But what I want to go through with you, because formulas is, if you can read, that's will show your net profit divided by sales. But I want to show those who hasn't done that, just where do you find it? I will do a nice Excel spreadsheet for next week. Then to say, okay, once you've get your analysis like this, I'm going to ask you in the exam, so which supplier would you buy from and why? And which supplier would you not buy from and why? Because if you can't, and I'll give very simple ratios so that you are very well prepared for the exam. So this is going to be from the practical, going to count of the part of the exam, a bigger portion. But I don't want to rush it. So next week, after we've done 45 minutes, we will go through the ratios for half an hour, and then we will do the last of chapter 16 and 17 and 18, 17 and 18. The week thereafter, when we have the exam session, I will at least spend 30 to 40 minutes with you on this, so that when you do it in the exam, you can even, I've given a handout of an Excel spreadsheet that you can go, and I'll even set up the formulas for you. I'll go and do that for you in a solution, so that when you do your exam one, you physically, easily peasily just go and put in the numbers, then it will work it out for you. You copy and paste it, but then you need to know, okay, so if this debtor days is 90 days versus 63, why is it better to go with that one versus the other one? Which we will do half an hour next week, and let's say 30 to 45 minutes in the exam week for prep. Okay, so you don't have to stress. I'm going to make it very easy for you. Okay, I will even record during the course of this week a small recording for you on this specific exercise that is not more than, let's say, 10-15 minutes that you can go back to before the exam. Will that help you? Yes, thank you. Okay. As a close out, any questions or comments before we do a close out and stop the recording? Are you all okay?
Yes.
Okay. So please, what you need to do for the next week is, thank you so much, Ashraf, Abulela, Lazat, for confirming. What you need to do for the next week is make sure you catch up before the 6th and submit your outstanding assignments. Okay, I cannot extend after that because we need to finalize the markings also for Windsor. The second thing is go and prepare your do your quiz, which will be uploaded by latest tomorrow for this week. Then the third thing is go and do your presentation for next week. Please don't do anything long. You've seen how Olina and Nuran done it. It's so short and sweet, to the point. And then upload it online. And then I will send the sequence in the group so that each one has a reminder when you need to present. Okay, and then for that class presentation, out of 30, if you're not attending in class and you just submit online, you won't get the benefit for that 10 points of the presentation in class. So you can, let's say, get 20 out of 30, but those out in class, short and sweet, will get their 30 out of 30. Okay. No questions? Then I'm going to stop the recording and bless you. Wish you all a blessed week. I already can feel, just by spending time with you, I think you're very good for COVID. So thank you for blessing me with your presence and your energy and your caring. Okay, have a blessed week, everybody. Eh?
Thank you,
Bye-bye.
Professor. Goodbye.
Thank you, Professor.
Bye-bye.
Bye.
Bye-bye. Bye-bye.